Hey everyone, and welcome to this market update. So today we had quite the reversal here. We were pushing up about 80 to almost 90 points here on the ES, and then the news about the COVID variant appearing in the US made a large reversal, and we basically went straight down the rest of the day here, which makes the market look pretty ugly overall. And we're going to be going over all the indices and some of the things to keep an eye on going forward for this week and into next week as well. So we can start off here with the ES. We can see we had this nice daily squeeze, which gave us that great push up here into these all-time high levels. And once you're at these levels, it's usually common that we get a reversion back down to this mean. But with the new COVID variant, we're getting a larger flush than just back to this mean at the 21 EMA, and it is accompanied by this daily squeeze firing to that downside. That being said, we are at extended levels here on the daily time frame. It's sitting a little bit below that -2 ATR. Could see push down to that -3 ATR before getting a reversion, but usually at these levels we do have to look for a reversion to start happening before we get more selling, which I think we potentially could now that we are breaking some structure. We do no longer have stacked EMAs, and we are trading well below that 21 EMA. So everything about this one is definitely looking to be breaking its bullish structure. That being said, the market did need a good pullback. Now here, if we look at the weekly time frame, this actually tells us a different story. So we can see that it's happened multiple times. You get a flush down to the 21, bounces off of it. Flush down to the 21, bounces off of it. All this weekly time frame is doing so far is bouncing down close to the 21, hasn't even touched it yet. So I think we could get more selling down into this level here at that 21 EMA on the weekly, and that could be a place of support for us going forward. If we get a close below that 21 and we see more selling below that 21 on the weekly time frame, that's where we have to start looking more bearish on the market as a whole. But I am more bearish on the daily time frame. But that being said, this weekly time frame is still holding up very well, and we are starting to form a new low compression squeeze here. So if this 21 EMA can act as a support, this could be a great buying place for another push just like this last time we had. Moving on to the next indice here, we will look at the Qs. Here we are. So this one was actually holding up very well compared to the other indices. That being said, today it did get the large flush with everything else. Same basically as the ES. We have this daily squeeze that is looking now to fire to the downside, so we could see some more selling coming out of this one. We do still have stacked DMAs, which is bullish, but with the overall market kind of selling off, it should kind of drag tech down with it. But tech, compared to the rest, is definitely showing a lot more strength. Next thing here we're going to look at is the weekly time frame, and just like the ES, that 21 EMA in the weekly time frame has been a great support place. You can see we came down here, touched it, bounced off it, made a great bull run, came down here, touched it, and made another great bull run. This one got up to +3 ATR, which is extended level, so I do actually like to see this pullback, which is very healthy here. We're right about at that 8 EMA. This one definitely could come back down to the 21 EMA as well, but the 8 EMA could also give this some support. If the ES itself holds that 21 EMA this week, I think that the Qs could hold that 8 EMA, which could be a great place of support for it. So now those are the Qs and the ES. We'll move on to the Dow now. And this one is a lot weaker and looks a lot more disgusting compared to the other indices. We can see that with the ES and the Dow, they both had that nice daily squeeze that pushed it up to these extended levels. Off of those extended levels, it made a nice reversion, but from that reversion, it absolutely fell straight down. That was accompanied by this daily squeeze pushing that one down, and especially the Dow will be getting hit the hardest due to the COVID news, because a lot of the sectors within that get hit heavily with news like that, where everything gets locked up again. So this one does make sense to why it is having a larger sell-off compared to the tech sector. But here at these levels, it is extremely extended to that downside, so there is always that potential for that reversion back up to the mean before seeing more selling pressure. But it does have very good bearish momentum here, and we could see some more falling, potentially down to these support levels where we were at previous lows. So definitely keep an eye out on those previous lows for a place of support where we could maybe bounce off those levels to try to go back up for that reversion. Or if we break through that level, then I think we could see even more selling, which could start to get ugly really quick. Now, if we move on to the weekly time frame from this one, it looks a little bit different than the ES and the Qs. Last time, it did hold this 21 EMA. You got a nice push up to about that plus 2 ATR. But now, I know we are in the middle of the week, but I'm going to guess that we are not going to close above that 21 EMA for this week, and last week we actually closed below it as well. We do have this weekly squeeze. Its histogram is still above the zero line, which is good to see, but if we start to get some red bars, this weekly squeeze could start to potentially fire to the downside, creating a lot more selling within the Dow itself. So definitely something to keep an eye on here. One level I am looking for, as well as those previous lows that I discussed, look for that 50 moving average on the weekly time frame as a place of potential support that it could bounce off that for a reversion. And once again, if it breaks that level, we could see a lot more selling, with this squeeze probably accompanying that move to the downside. So last but not least here we have the Russell, and the Russell kind of did almost had this breakout here with this nice daily squeeze firing it. Thought we were going to get a continuation because the weekly squeeze, if we come over here, was looking like it was going to fire to that upside as well. But just like all the other indices, it started to roll over, and this one is rolling over hard. So before, I've stated this before in some other videos, we have had some previous resistance when the Russell, excuse me, was in a consolidation phase where it's kind of just range bound. We had a resistance up here at these levels, and then you have a support down here where it would just ping pong back and forth between those levels. I thought that we would potentially find a support level at our old resistance. It did not, broke right through it, came back into this range, and now within this range you have to look to see if those previous support levels will also hold up as well. If those levels do not hold up, I think that we could see more selling with this one as well. So we will have to see, as we can see that this line, it hasn't yet come touch that or even reach that level yet, so we will have to see if it can hold that level, if it gets there or when it gets there. Now looking at the weekly chart, yeah, this one isn't looking so good as well. As I said before, had this large period of consolidation. Thought we were going to get that nice finally move to the upside here on the Russell. Did move up to plus 2 ATR, which is a nice extended level. Got that fall right back down here. Just kind of needed to hold those previous support levels, or as I said before with the Dow, this squeeze could start to roll over and could potentially fire to the downside, leading to a lot more selling pressure within the market itself. Now, one more thing I'd like to look at on the ES here is that instead of looking at a weekly time frame, if I pull up a monthly time frame here, it kind of puts things into perspective. So here, back in, what was this, 2016, you had a monthly squeeze, great bull run, things consolidate, we start forming another monthly squeeze. Yes, COVID hits, but it bounces back up here, and this squeeze fires to the upside, giving us an absolute unbelievable bull run here, which basically all of 2021 was great for traders because we are going basically straight up. Now, if we look here on the histogram, we have two different colored bars, which means it is losing momentum here on the squeeze. This tells me kind of two things here, that we should probably get more selling, at least down to this 8 EMA, or we can consolidate here and stay flat until this 8 EMA reaches it, or you could even potentially see a flush down to this 21 EMA, which would just be a reversion. Yes, the monthly doesn't have to come touch the 21 EMA as much, because that would be quite a large sell-off, but definitely wanting to see it come back down to this 8 EMA at least. Doesn't mean it has to, but I think we more than likely would do a consolidation and having this 8 EMA reach up to it before making any more moves higher. But this high up here could be a multi-month high before we ever get back to close to breaking it, in my opinion. Just kind of what I'm seeing from the charts. Doesn't mean it has to happen, but kind of what I'm seeing with momentum on these larger time frame stocks. Another thing that I want to focus on, and I think you all should be looking at as well, is the VIX here. So here, let me clean this up a little bit. Here we go. So the VIX here is firing this daily squeeze, making very drastic moves here. This previous level I've been looking at has been holding up very strong as support. This 28.95 level came up here, previously rejected it, fell back down, and got reverted to the mean. I thought we were going to do the same thing here when we touched it, and the next day we got this large flush. The VIX and the market had other plans, of course, and we got this break of that resistance into a new resistance. So it did push up higher above that resistance line, but did close directly at that line. So that's something to look at tomorrow and the rest of the week as well, is do we break that, or do we keep moving to the upside where we could potentially see the 37 mark hit, which would lead to a lot more selling within the market. Another thing to definitely keep your eye on here is this weekly time frame. If it loads here. So the last time we had our histogram on this weekly squeeze fire to that upside was when COVID hit, which gave us unbelievable selling. And we need to look here at this histogram where we are getting above that zero line. This is some bullish momentum on the histogram with some strong candles pushing it up here. I'm not saying that this has to fire to the upside, but if this does start to fire to the upside, we are going to see a lot more volatility and a lot more selling within the market. So just be very weary of this weekly squeeze on the VIX. I'm hoping we do start to eventually kind of flatten out or roll over back to normal volatility, which is right around 20, where I like to see it, or below. Does not mean it has to happen. We could easily go retest some of these previous levels in the next following weeks or months. So definitely something to keep an eye out on that. So that is kind of my overview of the market. Definitely things are looking ugly right now, but always keep things in perspective. The market cannot always go straight up. We do need these healthy pullbacks in order for the market to make a continuation eventually to that upside. So hopefully this helps you all out a little bit with seeing where the market could go, and hopefully the rest of the week we all can make some money.